Investment in index funds has become increasingly popular thanks to their low costs, diversification benefits, and simplicity. Index funds allow investors to gain exposure to the broader market without picking individual stocks. With the stock market continuing to perform well, now is a great time to invest in index funds. Let's start the video with the top 5 index funds to consider investing in 2023. Vanguard Total Stock Market Index Fund, VTSMX. The Vanguard Total Stock Market Index Fund, VTSMX, is a famous index fund that exposes traders to the complete U.S. equity marketplace. It tracks the performance of the CRSP U.S. Total Market Index, which includes over 3,500 shares and covers about 100% of the investable U.S. equity market. One of the important blessings of investing in VTSMX is its low-cost ratio of 0.14%, which is drastically decreased than the common price ratio for the actively controlled budget. This means buyers can maintain extra returns instead of paying excessive charges to fund managers. Another gain of VTSMX is its diversification advantages. Because it tracks the U.S. equity market, investors can benefit from exposure to diverse industries and sectors. This can lessen the overall danger to their portfolio. VTSMX additionally has a strong long-term music record, with an average annual return of 11.09% during the last 10 years as of September 2021. However, it is critical to notice that overall performance no longer guarantees future results. Investors ought to also be conscious that VTSMX is a passively controlled fund. This means it does not aim to outperform the market now. Instead, it pursues to suit the performance of its benchmark index. While this is not suitable for traders looking for actively managed finances, it is an excellent choice for those looking for low-value additional funding. iShares Core S&P 500 ETF. The iShares Core S&P 500 ETF is one of the maximum popular index funds, exposing buyers to the most important 500 companies inside the U.S. inventory market. It tracks the performance of the S&P 500 index. That's a benchmark for the broader U.S. fairness market. One of the important advantages of investing in IVV is its low price ratio of 0.03%, significantly lower than the average cost ratio for actively managed finances. This method that buyers can maintain extra in their returns, instead of paying high costs to fund managers. Another benefit of IVV is its diversification benefits. The fund invests in businesses throughout multiple sectors, which include era, healthcare, financials, and patron goods. This can lessen the overall threat to an investor's portfolio by spreading their investments throughout exceptional sectors and industries. IVV also has a sturdy lengthy-term song report, with a median annual return of 16.56% over the past 10 years as of September 2021. However, it is crucial to know that past overall performance no longer guarantees future results. Investors ought to also be conscious that IVV is a passively controlled fund, which means it does now not intend to outperform the marketplace. Instead, it aims to match the performance of its benchmark index. While this is now not suitable for traders searching out an actively controlled budget, it could be a great alternative for those in search of a low-fee Schwab US Large Cap ETF, SCHX. The Schwab US Large Cap ETF is an index fund that tracks the overall performance of the Dow Jones US Large Cap Total Stock Market Index. This index comprises the most important 750 publicly traded U.S. marketplace organizations specializing in huge-cap stocks. One of the important advantages of investing in SCHX is its low-fee ratio of 0.03%, which is appreciably lower than the common expense ratio for actively managed funds. This method allows traders to hold greater returns as opposed to paying excessive costs to fund managers. Another advantage of SCHX is its diversification benefits. The fund invests in corporations across multiple sectors, including technology, healthcare, financials, and customer items. This can lessen the general threat to an investor's portfolio by spreading their investments across unique sectors and industries. SCHX also has a strong long-term tune report, with a median annual go-back of 15.44% over the last 10 years as of September 2021. However, it is essential to note that beyond overall performance does not assure destiny consequences. Investors must also be conscious that SCHX is a passively controlled fund, which means it does not aim to outperform the market. Instead, its goal is to match its benchmark index's overall performance. While this cannot be appropriate for traders seeking out actively managed budgets, it can be an amazing choice for those looking for low-cost, diversified funding. The Schwab U.S. Large Cap ETF is an index fund that exposes investors to the biggest 750 publicly traded agencies in the U.S. market. It offers low prices, diversification benefits, and a robust long-term music report, making it a terrific alternative for a simple, low-price investment. Vanguard Total Bond Market Index Fund, VBMFX. The Vanguard Total Bond Market Index Fund is an index fund that seeks to music the overall performance of the Bloomberg Barclays U.S. Aggregate Float-Adjusted Index. This index consists of various investment-grade U.S. bonds, including government, company, and loan-subsidized securities. One of the key blessings of investing in VBMFX is its low price ratio of 0.15%, drastically decreasing from the common fee ratio for actively controlled bond funds. This manner that buyers can preserve greater in their returns as opposed to paying excessive charges to fund managers. Another advantage of VBMFX is its diversification advantages. The fund invests in various bonds, which include U.S. Treasuries, company bonds, and loan-sponsored securities. This can reduce the overall hazard of an investor's portfolio by spreading their investments across unique styles of bonds. VBMFX additionally has a sturdy long-term tune record, with a mean annual go-back of 4.37% over the last 10 years as of September 2021. However, it's essential to be aware that beyond overall performance does no longer assure destiny consequences. Investors should also be aware that VBMFX is a passively controlled fund, which means that it does not aim to outperform the marketplace now. Instead, it aims to suit the overall performance of its benchmark index. While this may not be suitable for buyers searching out an actively managed budget, it can be an awesome alternative for the ones looking for low-fee, diverse bond funding. The Vanguard Total Bond Market Index Fund is an index fund that provides buyers with exposure to a wide range of investment-grade U.S. bonds. It gives low fees, diversification advantages, and a robust lengthy-term music report, making it a great choice for traders looking for easy, low-value bond funding. iShares Core MSCI EAFE ETF IEFA. The iShares Core MSCI EAFE ETF is an index fund that seeks to music the performance of the MSCI EAFE index. This index includes massive and mid-cap shares from evolved markets outside North America, which include Europe, Asia, and Australia. One of the key benefits of investing in IEFA is its low expense ratio of 0.07%, which is considerably lower than the average expense ratio for actively managed worldwide finances. This means investors can hold more in their returns rather than paying high fees to fund managers. Another benefit of IEFA is its diversification benefits. The fund invests in businesses across more than one sector and country, which can reduce the general danger of an investor's portfolio by spreading their investments across exceptional regions and industries. IEFA additionally has a sturdy long-term song document with an average annual return of 7.36% over the last 10 years as of September 2021. However, it is critical that past overall performance no longer guarantees future effects. Investors must be aware that IEFA is a passively controlled fund. Additionally, it has yet to have the goal of outperforming the marketplace. Instead, it aims to match the overall performance of its benchmark index. While this could now not be appropriate for investors searching out actively managed price ranges, it can be an awesome alternative for those searching for a low-value, varied global investment. The iShares Core MSCI EAFE ETF is an index fund that exposes investors to big and mid-cap shares from developed markets outside North America. It gives low charges, diversification blessings, and a strong lengthy-term song file, making it a terrific choice for low-value global funding. That's all for today. If you enjoyed watching the video, hit the like button and comment below. And if you want to know about the difference between an index fund and ETF, check out that video right here, and we'll see you there.